Hello and welcome to this video on next week's meeting of the ECB and the Fed. The ECB is expected to raise its key interest rates by 25 basis points next week. Also, the hawks on the Governing Council may keep a big 50 basis points rate hike in play. The ECB deposit rate would then be at 3.25%. The Fed is also expected to go up only by 1/4 of a percentage point next week. After the expected interest rate hike next week, the ECB is likely to add another 25 basis points in June. The deposit rate would then be at 3.5%. That would probably also be the end of the rate hike cycle. First, inflation has fallen from over 10% to just under 7% since October. It is likely to have declined further in the summer. Then the ECB Council members will say that the direction is right and that core inflation, excluding energy and food, will soon follow downward. Second, at 3.5% in summer, the ECB deposit rate will be well above the neutral rate, which the ECB sees at only 2%. So ECB Council members are likely to say that they have done enough to bring down high inflation on a sustainable basis. However, I doubt that 3.5% will be enough. After all, a neutral rate of 2% implies an inflation-adjusted equilibrium rate of only 0%, which is not plausible. In the past, the Bundesbank used to fight inflation by setting the policy rate above inflation. After next week's hike, the Fed is also likely to raise rates again, as the US labor market is still tight. At its peak, the upper limit of the Fed interest rate corridor is likely to rise to 5.5%. We expect the first rate cut in the US after the turn of the year.